In today's video I will introduce you to the results of the Bulldozer Trend Strategy Test. Trading strategies that effectively manage long-term and short-term trends and include an oscillator have long been considered consistently profitable.
Recently, I came across an interesting approach known as Bulldozer, which was actively advertised on an online resource as a medium-term grail for highly liquid markets.
Intrigued by its strange name and promising claims, I set about investigating its validity. The aim of the presentation is to present the results of testing the strategy in three markets: the US S&P 500 stock index, the gold commodity market, and the EUR/USD currency pair. For the testing, I have divided the data available for these markets into in-sample and out-of-sample periods so that the in-sample is a maximum of 10 years and the out-of-sample is always 5 years.
I chose my favorite D1 as the time frame.
The original Bulldozer strategy setup is as follows. It uses two moving averages of 21 and 70 to assess the trend and the awesome oscillator to time the trade entry. Time frame H1 or H4 is recommended as the time frame with variable stop loss and profit. To enter a long position, three conditions must be met, as well as to enter a short position. Exit the trade is at the hit stop loss or when the awesome oscillator histogram crosses the zero line in the opposite direction. I performed the testing in Strategy Quant X using a template I set up to use data mining. Thanks to it, I can see what results the strategy achieves with different values of its parameters. I also added a time condition for exiting the position, as I want the trade to last a maximum of 6 months. The trade entry is made immediately after the entry conditions are met, not by a pending order, and with stop loss, profit and trailing stop set. In the builder, I then used my usual settings that I used to test the idea. I tested the S&P 500 stock index, the gold commodity and the EUR/USD currency pair by generating two packages of 1000 strategies on the D1 timeframe that I trade, with in-sample generation and out-of-sample test on different time periods. The reason for this is to limit the effect of partial correlation between strategies, which also occurs in random generation, and to verify that the tested idea has an edge over time. I evaluate the edge based on the entire portfolio of 1000 strategies, where I am only interested in the percentage of profitable strategies. I ran the first out-of-sample test of the S&P 500 market and long-only trades on 2018 to 2022 data. The percentage of profitable strategies in the portfolio came in at just over 57. From the results for each year, it appears that the tested idea works great when the market is in a strong bull trend, which was in 2019 to 2021. However, it is highly inefficient in 2018 and 2022. I ran the results of the second out-of-sample test on data from 2014 to 2018. The percentage of profitable strategies in the second portfolio was just over 51 and only 2 years were at 65%. I performed the first out-of-sample test of the EUR/USD market and trades on both the long and short side on data from 2018 to 2022. The percentage of profitable strategies in the portfolio reached a value of just over 28.86. From the results for each year, it appears that the tested idea does not work at all for this market. I ran the results of the second out-of-sample test on data from 2008 to 2012. The percentage of profitable strategies in the second portfolio only reached a value of slightly over 48.66%, when the last 3 years did not even get over 50%. I ran the first out-of-sample test of the gold market and long-only trades on 2018 to 2022 data. The percentage of profitable strategies in the portfolio came in at just over 58. From the results for each year, it appears that the tested idea works great when the market is in a strong bull trend, which was in 2018 to 2020 and in 2022. The percentage of profitable strategies in the second out-of-sample test was only slightly over 45%, and in the years 2013 to 2015 it would not have even been worth trading Bulldozer. The test results for the Bulldozer strategy are as follows. For the S&P 500 market, the first test showed that 57.17% of the strategies were profitable, while in the second test this proportion was 51.25%.
For the Zloty market, the same parameters were used as for the S&P 500 test.
In the first test, 58.15% of strategies were profitable, while in the second test, 44.57% were profitable. Also for the EUR-USD currency pair, the same testing parameters were used for the out-of-sample tests as in the previous two cases.
In both tests, the percentage of profitable strategies was below 50%.
This statistic can provide information about the success of a strategy and its ability to generate profits in a given market.
Unsurprisingly, the results obtained indicate that the Bulldozer trend method could be successful on the US S&P 500 stock index.
So if I wanted to test this method further, I would focus on the S&P 500. It is important to keep in mind that the results of testing on historical data may not guarantee the future performance of the strategy.